Let's go over the W-2G Certain Gambling Winnings IRS tax form. How to enter it into tax software, whether you can deduct gambling losses and how much, what the impact is if you itemize on Schedule A, and the 2026 tax law changes. I will also cover online tools to help you calculate your gambling tax, and we will briefly go over the 9 factors the IRS uses to determine whether your gambling is a business or a hobby. I will use TaxSlayer and TurboTax as examples, with a focus on the recreational gambler. So let's get started. In any tax software, to find the W-2G gambling section, go to the Federal section and look for Income. Then find Other Income. An even easier way to find it is to search using the keyword gambling or by searching for the W-2G tax form. Either way, you will get to the same place, the W-2G gambling winning entry screen. You can receive a W-2G form for different types of gambling, such as horse racing, sweepstakes and lotteries, bingo and slot machines, poker tournaments, and sports betting. The instructions are very similar regardless of which type of gambling winnings are reported on the form. The U.S. commercial casino gaming industry reported a record-breaking revenue of more than $78 billion in 2025, driven by growth across traditional land-based casinos, sports betting, and internet gaming markets. The gambling industry is booming, and so is the reporting of gambling income. Per IRS statistics of income data, from 1995 to 2023, the number of tax returns reporting gambling income grew from 1 million to 2.3 million, more than doubling. While the total amount reported grew from 7.9 billion in 1995 to 61.3 billion in 2023. The average win per filer in 2023 was 26,600. However, only about 593,000 of those 2.3 million filers in 2023, roughly 1 in 4, actually itemized and deducted gambling losses. Those filers claim a total of 42.7 billion in loss deductions, averaging about 72,000 per filer, nearly 3 times the average reported winnings. That gap suggests that filers who itemize tend to be much heavier gamblers than the typical person reporting gambling winnings on W-2G. When you receive the W-2G form, first double-check that the name and address on the form match your information. Then enter that into the tax software. Enter the payer's federal identification number, which is similar to a social security number but for entities. And verify the payer's name and address if it comes up after you enter their ID number. Box 1 lists the reportable winnings, which may also be labeled as gross winnings. Companies are required to issue W-2G to anyone whose winnings are at least 300 times the amount of the wager, or when federal withholding is required under specific gambling criteria. For example, if the wager exceeds $5,000 and the winnings are at least 300 times the wager, a 24% withholding would apply to horse racing bets. However, many gambling establishments issue the form for much smaller winnings and wagers as well. I will enter the 10,000 win for Luca here. Now, you won't find gambling losses on your tax form itself, but you may be asked for that information inside the tax software. Here in TaxSlayer, I'm asked to provide the amount of gambling losses, which for tax year 2025 and earlier are limited to 100% of your winnings. if I lost $15,000 in order to win $10,000, I can't enter the full $15,000. I can only enter up to $10,000. And gambling losses can only be deducted if the taxpayer itemizes. We will go over the most recent tax law change starting for tax year 2026, where the gambling loss deduction has been reduced to 90% of losses and still kept at winning amount. Box 4 on your W-2G lists your federal income tax withheld. It may be zero. However, if your winnings are above $5,000 or at least 300 times the wager, or the winner couldn't provide a social security number, regular or backup withholdings of 24% could apply. Box 3 lists the type of wager, such as slots or bingo. Note that some tax software does not list box numbers that correspond to the W-2G form. So it is on you to make sure the headings match between the form and the software. Box 2 lists the date of the winning event, not necessarily when you were actually paid. If you have state and/or local tax information, it would be listed in boxes 13 through 18. Make sure you enter any state withholdings that were taken out. This is a frequently missed entry in tax software, and you want to get credit for paying your state taxes. Box 5 through 7, transaction, race information, and winnings from identical wagers may or may not apply to your type of gambling winnings. Only enter them in the tax software if they appear on your W-2G form. Box 8, cashier, lists the initials or ID of the person paying out the winnings. Box 9 is the winner's social security number. Box 10, window, is the location of the person paying the winnings, such as the cashier's window. It may not be applicable to your situation. Box 11 and 12 list the forms of identification used to verify the name, address, and tax ID of the person receiving the winnings. 2 forms of identification are required, such as driver's license, passport, social security card, or military ID. For some gambling winnings, like lotteries, one of the 2 forms of identification must include the recipient's photograph. Once we enter the W-2G information, I can preview the tax forms. The gambling winnings are listed on Schedule 1, Part 1, Additional Income, Line 8B, Title Gambling. That flows to the 1040, and for tax year 2025, I can see the additional $10,000 of gambling winnings listed on Line 8 as additional income from Schedule 1. In this situation, Luca took the standard deduction of $15,750 as a single filer. You may ask, what happened to the $10,000 in losses we entered into the tax software? They are not showing up because Luca used the standard deduction. In order to deduct any gambling losses, Luca would have to itemize his taxes. Let's compare this situation where Luca only had W-2 wages and no gambling winnings. He would have owed $815 in federal taxes. However, because of the additional $10,000 in gambling winnings, he now owes the federal government $2,015 in taxes. Ouch. The best way to compare 2 tax scenarios is by looking at the effective tax rate, your total tax divided by your taxable income. For Luca, the rate goes from 14.45% without gambling income to 15.42% with it. He would pay $2,200 more in total tax for the year, which is a real difference. Gambling losses are only deductible if you itemize on Schedule A, meaning your total deductible expenses have to exceed your standard deduction. If they don't, the standard deduction wins and your gambling losses give you no tax benefit at all. The standard deduction is a flat amount based on your filing status, whether you're filing as single, married filing jointly, or head of household, and adjusts slightly each year for inflation. On top of that, taxpayers who are 65 or older or blind qualify for an additional standard deduction. So your effective standard deduction could have two layers: the base amount and the age or blindness addition. The standard deduction amount factors into whether itemizing your gambling losses is actually worth it. In any tax software, you can enter all your itemized deduction expenses and let the software calculate which deduction is better, the standard or itemized. To find the itemized deduction section, go to the Federal section and then Deductions. In TaxSlayer, it is clearly listed as itemized deductions. Click Begin to see all the possible expenses that can be deducted on Schedule A. Go through all the ones that apply to you and your family. I am going to enter some out-of-pocket medical expenses that Luca paid in 2025, such as doctor visits and prescriptions. Note that the medical expenses on Schedule A are limited to anything above 7.5% of your AGI. So for many people, it is a threshold they rarely beat. We will enter them anyway and let the software calculate what's better for us. The next thing you want to enter is any mortgage interest you paid, which you would have received on Tax Form 1098. You can also search for that form in the tax software. The interest you can deduct is only on a loan used to purchase, build, or improve your main or second home. Enter the lender's name and loan information. One item that may often be listed on 1098 is real estate taxes, and many tax software programs will have a separate entry option for that. Pay attention, if you already entered real estate taxes in the 1098 mortgage section, that same amount can also appear under taxes paid in the itemized deduction section. Do not enter it twice. Now, when I go to the taxes you paid section, I can see that the $5,500 in real estate taxes I already entered on the 1098 is already listed here. So I will not enter it again. Any state and local income taxes you enter on your W-2, 1099, or W-2G will also be listed here already. So don't double enter them either. If you live in a state without income tax, you may want to enter your sales tax information so the software can calculate that deduction for you. For most people in states where you pay state income tax, the income tax deduction is usually higher, and you can only use one or the other. The tax software will calculate which is better for you if you enter them both. Another common item on Schedule A is gifts and donations to charities. I will enter some cash donations that Luca made during the year. Finally, to deduct gambling losses, go to Other Itemized Deductions. Note that under the Gambling Losses box, losses cannot exceed your winnings reported on W-2G, which in Luca's case is $10,000. Also, do not enter losses here if you already entered them with the W-2G income, which we did. I am going to enter the $15,000 of losses anyway, which is more than the $10,000 in winnings, and also a double entry since I already entered the losses on the W-2G. I want to test whether the tax software catches this and avoids error on my return. Now let's preview the itemized deductions on Schedule A for tax year 2025. Notice at the top that none of the $2,900 in medical expenses are deductible, Because Luca's AGI of $93,000 means deductible medical expenses would have to exceed his 7.5% of AGI, which is $6,975. Taxes paid are listed on lines 5 through 7 and total $10,000. Mortgage interest is listed on lines 8 and 10 of $4,300. Charitable donations are listed on line 11 of $1,450. And Luca's gambling losses are listed as $10,000 on line 16 of Schedule A. Two important things about this line. One, even though we entered it twice, once with the W-2G tax form and once as an itemized deduction, the software only listed the $10,000. TaxSlayer recognized the double entry mistake. Additionally, in the TaxSlayer, even though we enter $15,000 in losses, it only allowed losses up to the amount of winnings. That is a good tax software behavior. However, not every software has these checks. So you should never double enter the same expense twice and never enter more than the allowed amount, which is up to your winnings for tax year 2025 and before. So Luca's total itemized deductions on $25,750 on line 17, which is $10,000 more than his standard deduction. Before I review the 1040, I will remove the double entry for the gambling losses. You do not want to receive an IRS letter or notice if you deduct the same thing twice. So now the gambling losses are only entered with the W-2G winnings tax form. Now when I look at my 1040, I can see the gambling winnings from Schedule 1 on line 8. But now the itemized deduction is $25,750, which reduces Luca's taxable income, and he gets a small refund of $185 instead of owing $2,015 when he used the standard deduction. With the itemized deduction, Luca's effective tax rate drops back down from 15.42% to 14.45%. The same rate he would have had if he never had gambling income at all. In this case, itemizing essentially wiped out the tax impact of his winnings. In most tax software, there is a section where you can choose which deduction to use, or let the software pick the one that is better for you. You can also often compare the standard and itemized deductions side by side to see the exact amount that gets subtracted from your income before it is taxed. In Luca's example, his standard deduction would be $15,750, while his itemized would be $25,750. A significant difference. In his case, itemizing makes sense. However, if you do itemize, you need to keep records to support all your deductions in case the IRS requests them. For gambling losses specifically, that means receipts for all bets and wagers with dates, locations, and amounts. With the standard deduction, it may be a smaller deduction, but taxpayers get it automatically without needing to keep any supporting paperwork. A really useful tool I found is the standard versus itemized deduction calculator on the National Tax Tools website. You can easily enter your information to find out which deduction would be better for you without having to enter everything into tax software. Now, we talked about being able to deduct 100% of gambling losses on Schedule A if you itemize. But that was true for tax year 2025 and earlier. So if you still need to file your 2025 return or amend a prior year return, the 100% rule still applies. However, for tax year 2026 and forward, under the One Big Beautiful Bill Act, only 90% of your gambling losses are deductible, even if you itemize. The 90% is still capped at the amount of your winnings. So a break-even gambler would be taxed on the 10% of their winnings regardless. And that 10% does not carry forward and cannot offset other income. You will pay tax on it even if you itemize. The winnings amount is the overall cap. So first you calculate 90% of your losses, then you cap the result at the amount of your winnings. The National Tax Tool website has a fantastic, easy to read and comprehensive gambling loss deduction guide. I highly recommend it for reviewing both past and current tax law. Let's go over some real examples. Example 1. A gambler has $10,000 in both winnings and losses in 2026. He can only deduct 90%, which is $9,000, of his losses if he itemizes on Schedule A. $1,000 will still be taxable even though he broke even. Because of the new 2026 tax rules, be prepared to set aside money to cover gambling income taxes. Now let's look at example 2. It's the same scenario but for tax year 2025. In that case, the taxpayer can deduct the entire $10,000 on Schedule A. Now let's take a look at the third example. A gambler in 2026 won $10,000 but had $20,000 in losses. First, 90% of $20,000 is $18,000. But that has to be capped at the winning amount of $10,000. So the gambler can deduct $10,000 on Schedule A. They cannot carry forward the remaining $8,000 in deduction as losses, nor can they use them to offset any other income. Example 4. A gambler won $20,000 and also lost $20,000. For 2025, he could deduct 100%, and for 2026, only 90%, but in both cases, only if he chooses to itemize his expenses. If the gambler takes the standard deduction, the entire $20,000 in winnings is taxed with no offset for losses. In that situation, keeping good records and itemizing makes a significant difference in how much in federal tax you end up paying. As I mentioned at the beginning of this video, we are not covering gambling as a professional gambler in detail. But I do want to go over how professional gamblers compare to a recreational or casual ones, and when is gambling income considered a business rather than a hobby. If you are a professional gambler, meaning gambling is your full-time livelihood, you report on Schedule C like a business. Your winnings are income and your losses plus business expenses like travel and entry fees are deductible. But starting in 2026, you can only deduct 90% of that total and never more than your winnings. You cannot, as a professional gambler, report a net loss from gambling on Schedule C. Let's go over example. A professional gambler had winnings of $200,000. His losses plus wagering expenses were $150,000 and $20,000. In 2026, he can only deduct 90% of his losses and expenses, which is $153,000. The remaining $47,000 is a taxable gambling income, even though he only made $30,000 in gambling winnings. Some people call this phantom income, meaning the IRS taxes you on winnings you no longer have. But that is no different from earning $40,000 on a W-2 and spending every dollar on rent, food, and healthcare. The IRS still expects taxes on your income regardless of how you spent it. There's also a significant downside to professional status. Your net gambling income is subject to self-employment tax, which is an additional 15.3% on top of regular income tax. If you are a professional gambler, you would report your gambling activity on Schedule C and would not itemize your losses on Schedule A. So how does IRS define a professional gambler? To qualify as a professional, you have to prove you gamble full-time in good faith with regularity as your actual livelihood, not as a hobby. The IRS scrutinizes this closely, and claiming professional status without truly meeting that standard is an audit risk. In order to determine whether gambling is a business or a hobby, the IRS applies these 9 factors. 1. Does the taxpayer carry the activity in a business-like manner, with complete and accurate books and records, a gambling diary, and has a business account? 2. Does the taxpayer have the expertise needed to carry on the activity profitably? Skill-based games like poker and sports betting supports this factor more than chance-based games like slots or roulette. 3. How much time and effort does the taxpayer put into the activity? There is no hard minimum, but anything under 20 hours per week is generally considered weak. 4. Does the taxpayer expect assets used in the activity to appreciate in value? This factor is largely not applicable to gambling since no gambling assets appreciate. 5. Has the taxpayer engaged in similar activities in the past and made them profitable? This factor has limited value for gamblers unless they have run other gambling-related businesses. 6. Has the taxpayer been profitable in at least 3 out of 5 years? Persistent and unexplained losses may indicate a hobby, although failing this criteria does not automatically make your activity a hobby, but can definitely be a red flag. 7. Are the occasional profits proportionate to the total losses and time invested? A small profit against a backdrop of large, consistent losses does not demonstrate business intent. But a substantial profit, even if rare, can support it. 8. What is the taxpayer's financial status? A high-income taxpayer with substantial income from other sources who is also claiming large gambling losses raises hobby red flags with the IRS, especially when there are personal or recreational elements involved. And finally, number 9, does the taxpayer derive personal pleasure from the activity? Gambling is inherently recreational, so this is the most challenging factor for gamblers. However, personal enjoyment alone does not automatically disqualify business status if other factors support a profit motive. Per CPA Journal statistical analysis, taxpayers with at least 3 favorable factors have more than 60% chance of winning a professional gambler status claim with the IRS. If the taxpayer can raise it up 4 or more favorable factors, that chance of winning a professional gambler status claim with the IRS jumps to around 90%. Before tax time, you should periodically check how much you can expect to owe at the end of the year. You can do that easily with the Gambling Loss Deduction Calculator on the National Tax Tools website. This calculator will show you the amount of tax owed and how much of your losses against winnings would be deductible for tax year 2025 or 2026 based on your filing status, whether you're a professional or recreational gambler, and based on the amount of your winnings and losses. Let's use Luca's example to test the calculator. For 2025, as a casual gambler filing single who plans to itemize, Luca had $10,000 in winnings and $10,000 in losses, with good records to support them. I will leave the 24% marginal tax bracket as is. When I press calculate, I can see that for 2025, the full $10,000 in losses is deductible on Schedule A, 100%. So he would owe no tax on his gambling income. Now I will run the same scenario but for 2026. Only $9,000 of his losses, 90%, are deductible on Schedule A. And he will have $1,000 of net gambling income that gets taxed. What if for 2026 his losses were $15,000 instead of $10,000? In that case, 90% of 15 is $13,500, which exceeds his $10,000 in winnings. So the deduction gets capped at $10,000. The full $10,000 is deductible and Luca has no taxable gambling income. Now, if Luca had not kept good records and could not substantiate any losses and chose the standard deduction, his entire $10,000 in gambling winnings would be taxed with no deduction for the $15,000 in losses. That would lead to a significant tax bill. The most important takeaway from all of this: keep track of all your bets and gambling activity, either digitally or in a notebook. The IRS measures gambling on a per-session basis, not bet by bet. A slot player session is a continuous period of play, so you net the wins and losses within that session before reporting. Reporting each individual winning spin as gross income while ignoring the session, that method inflates both your winnings and your loss deduction limit. I am recording this in the summer of 2026, so the tax software has not yet been updated for the tax year 2026. Be aware that entries and screens may change. However, as long as you understand the process and what needs to be calculated, you can apply it however the software presents it. The calculation may be done automatically by the software, or you may need to do it yourself. You may need to enter gambling losses either with your W-2G tax form or in the Itemized deduction screen. In TaxSlayer, I will go to my W-2G form and calculate how much I can enter for gambling losses if this were a 2026 return. In our example, Luca won $10,000 and had $15,000 in losses. 90% of $15,000 is $13,500. Since $13,500 exceeds his $10,000 in winnings, his deduction is capped at $10,000, which is still the full winnings amount, so no taxable gambling income. Now let's say his losses were exactly $10,000, same as his winnings. In that case, for 2026, he could only deduct 90%, which is $9,000. That amount would need to be entered into the tax software. or the software may eventually be updated to do the calculation automatically when you enter the actual expenses. You should always verify the deduction amount to make sure you are not claiming more than allowed and potentially receiving an IRS notice. When I preview the 1040 now, I can see the itemized deduction has been reduced by the disallowed $1,000 in losses. And instead of $185 in refund, Luca now owes $35 in federal income tax. On Schedule A, I can see the reduced losses on line 16. Let's briefly summarize our examples. By comparing the total tax owed rather than the refund or amount due, since the additional W-2G withholdings can skew the comparison. Adding $10,000 in gambling winnings increased Luca's total tax by $2,200 when using the standard deduction. Itemizing in 2025 would fully offset that in our example, bringing him back to the exact same total tax as if he never gambled. But under the 2026 90% rule, even with itemizing, his taxable income would slightly increase because only 90% of his losses would be deductible. We have been talking about deducting losses on the federal tax return. However, many states tax gambling winnings in full, but disallow or limit the deductions of losses. The way taxes flow from federal to state is that most state returns start with the adjusted gross income from your federal 1040. For tax year 2025, that is line 11. Gambling winnings are included in your AGI through Schedule 1, line 8. The standard deduction or Schedule A itemized deductions are subtracted on line 12. Because of this, any gambling loss deduction taken on the federal return do not automatically carry over to your state return. For example, in my state of Illinois, there is no subtractions allowed for gambling losses on the Illinois 1040. Luca's $10,000 is taxed in full at the state level regardless of whether it is 2025 or 2026, and regardless of whether he uses the standard deduction or itemizes on his federal return. Other states that disallow or limit gambling loss deductions include Connecticut, Indiana, Massachusetts, Ohio, and Wisconsin. Some states that do allow a loss deduction tie it to itemizing on the state return. However, many states only allow you to itemize if you also itemize on your federal return. State tax laws change frequently, so you should verify the rules for your own state or consult a tax professional. I will also cover TurboTax since it is one of the most widely used tax software programs. To find the W-2G gambling income section, go to the Federal section, then Income. Click the Add More Income button. You can use the search box to find the form, but if you type W-2G, it does not come up. You actually have to type gambling. Then go through the questions and start entering the information from your W-2G. The EIN number of the establishment that issued the form, their address, winnings, date won, type of wager, and federal withholdings. What is nice about TurboTax is that the entry boxes are numbered, so they correspond directly to your W-2G form. Complete the boxes that have information and leave blank any that do not apply. Enter state information and click Continue. Now you will be asked about your gambling losses associated with the $10,000 win. If I enter $15,000 in the 2025 TurboTax software, I get an error saying gambling losses may not exceed gambling winnings. What if you want to itemize your taxes in TurboTax? Go to the Federal section, then Deductions and Credits. Then find Tax Breaks. You will be asked a few questions about your possible deductions. If any deductions apply to you, they will be listed for you to complete. To find all possible itemized deductions, click Add More Tax Breaks. You will see different categories, but nothing specifically labeled as itemized deductions. If you search for itemized, the closest result is by searching for Schedule A. Though not everything listed there will apply to itemized deductions. That is a real shortcoming of TurboTax. Most other tax software programs have a dedicated itemized deduction section, but not TurboTax. The best way to complete this section in TurboTax is to pull up Schedule A for the tax year, review what can be deducted there, and then search for each item in the tax software. First, I will enter mortgage interest information from the 1098. You can also list real estate taxes here if they appear on your 1098 tax form, so I will add them. There may be few additional questions about the mortgage loan to confirm the interest is deductible. Next, I will go to the taxes lookup aid. The $5,500 in real estate taxes already entered on the 1098 is already listed. Do not enter it again. Next, I will enter out-of-pocket medical expenses for Luca. Since medical expenses are limited to amounts above 7.5% of your AGI, TurboTax calculates that threshold based on your total income. If your out-of-pocket expenses do not exceed $6,975, they will not be deducted, so you may not even need to list them. Charitable deductions can also be listed on Schedule A, so I will find that section and add the cash donations Luca made in 2025. I already added the gambling losses when I entered the W-2G information, but if you need to find them, searching under deductions or using keywords like gambling or W-2G does not work. The gambling losses are actually located in the federal income section. Search for gambling where you need to enter the W-2G form information. After you input the W-2G information and answer a few questions, you will reach a screen to enter the gambling losses up to your winnings. For 2026, that would be limited to 90% of your losses that are still capped at your total winnings. So in our $10,000 win example, 90% would be $9,000. That is the amount that would be entered here. To preview the 1040 in TurboTax, go to Tax Tools on the left, then click Tools. Then select View Tax Summary. To preview the 1040 income tax form, select it on the left. You will see the 1040 and the amount of the standard or itemized deduction on line 12A for 2025. You can scroll further down to review Schedule 1, 2, and 3. However, the Schedule A itemized deduction form will not be listed there. Unfortunately, the only way to preview 1040 in TurboTax is to pay for the tax preparation first. To see your itemized expenses and compare itemized versus standard deduction in TurboTax, go to the Federal section and then Deductions. Searching for itemized deduction or Schedule A will not bring up a full itemized deduction list. Instead, you will get a partial list of some Schedule A items. Make sure you go through and add all the deductions that apply to you for the year. Then scroll down to Done with Tax Breaks. You will see a screen that shows what your standard deduction would be. For Luca, that is $15,750 as a single filer. And you will see the amount of itemized deductions he could take instead, which is $26,370, significantly more. Click Show me the estimated breakdown to see the items that would appear on Schedule A. Listed there are state and local income or sales taxes, real estate taxes, mortgage interest, charitable donations, and the $10,000 in gambling losses listed under other itemized deductions. If you want to, you can click the Change My Deduction button to switch which deduction will be used on your tax return. I can see that with the standard deduction, Luca would owe $2,015 in federal income taxes. But if he itemizes, he gets a small refund. You can learn more about each deduction by clicking the More Info link to see an explanation. Thanks so much for watching.